So Fay, you're looking at Spur Tree, a company that a lot of people watching right now would have bought at IPO, and they've just released their 3-month results. Give us the highlights.
Thank you, Kalila. Please share my screen. Okay. Okay, so a quick overview before we go into the numbers. Spur Tree, as you know, their principal activity include manufacturing and distributing seasoning spices, canned akis, and kalaloo, primarily for the export market. The company, as you remember, was listed in the early part of 2022, and they got over $200 million in capital that they deployed into increasing production and establishing another production facility in St. Thomas. The company has a strategic plan of transitioning from a sauces and seasonings provider to a fully equipped food company, and we have seen this being realized. So, for example, in 2021, they partnered with Exotic Products. Then in 2022, they acquired 51% of Canco Limited, which trades as Linstead Market. We have also seen where they have made significant progress in expanding their distribution in overseas markets. And on the side here, you see some of the companies where they distribute from, for example, ShopRite and Food Bazaar. They have also included Stop and Shop in the US, and through the National Baking Company, they also distribute to the UK. For Jamaica and for the wider region, they have partnered with Massey Distributions to distribute products. So now looking at the results, the financial statements, an extract from the financial statements. If we look at financial year 2022, which is the latest annual results, we see that the company continues to experience significant growth over the period presented, demonstrating the successful implementation of their ambitious growth strategies. For 2022, we see that revenues rose from 860 million in 2021 to 1.03 billion in 2022. So Spur Tree made it into the $1 billion revenue club in 2022. That was an increase of 62%. So the knock on
Nice.
Yes, that's great. So the knock-on effect of that strong top-line growth was that their net profits also rose 27% from 91 million to 115 million for 2022. Now, moving on to the 3-month results, we see that they're, I'm sorry, skipping too fast. We see that the growth continues for Spur Tree. For revenues, there was a 62% increase in revenue from 22 to 23, that's quarter one, where the revenue moved from 237 million to 383 million. So this revenue was driven by the sales from their acquisitions. So, for example, Canco and Exotic Products, as well as they experienced a reduction in the supply chain challenges that they experienced, especially in 2020 after the pandemic and after the Ukraine Russian escalation. So now we're seeing that they're having an easier time in sourcing their bottles and cans, which they mainly source from overseas. So even though the company was better able to source these materials, they still source most of their raw materials from the local farmers and so on. So the high inflationary environment in Jamaica has caused the costs of their raw materials to go up substantially. However, the company has said that they continue to have conversations to strategize with these local partners to see how they can reduce costs. They also have plans to try to build capacity to take advantage of excesses in the market because they focus on products, agricultural products such as ackee. So when, for example, there's a glut in the market, ackees are everywhere. The prices are usually lower, and if they are able to store them, then they would have them for longer periods and they would have gotten them at a great price. So given that the costs and expenses both went up substantially, you would think that it would impact their profits, but nonetheless, revenue growth was high enough, sufficient, where their gross profits grew now from 124 million and approximately 40% growth up to, I'm sorry, it grew from 89 million up to 124 million compared to last year. Their gross margin, however, was a little bit lower, moving down to 32%. But it's still comparable to what we have seen over the periods here. So we could still say that they're showing some amount of stability. Their efficiency ratio deteriorated slightly as well, moving from 16 to 17%. And this was because of the growth in their expenses. So the raw material prices went up, but also their admin and other expenses rose significantly, over 70%. Most of this was again driven by the consolidation of their new acquisitions, that's Canco, as well as they have been making additional investments in lease space and staff expenditure. But given that this should support further growth, we're not really worried about these costs growing because it's for the future.
Mm.
They also face a substantive increase in finance costs. This was again due to loans that they acquired for the Canco acquisition. If we look at overall profits, due to the increases in costs and expenses, they recorded a slight fall in net profit from 50 million to 47 million. But you have to take in mind that last year in 2021, the quarter one of 2021, they had a substantial increase, over 190% growth in their profits. So it would have been very, very hard for them to top that. Following the decline in the profit, net profit margin also weakened a little bit. However, as the company continues this aggressive growth strategy and strategizes methods of containing costs, deepening market penetration, we expect to see positive impacts on profits over time. We can also see that the EPS, the earnings per share, moved down a little bit from 3 to 2 cents. But even though this highlights a slight reduction in value for shareholders, given the growth trajectory of Spur Tree, it's kind of expected that shareholder value would fall a little bit because they're spending a lot on growing, expanding, and acquiring new business. I look at the balance sheet now. We see that their total assets grew substantially by 103%. And this is partially due to a lot of property, plant, and equipment that they acquired after consolidating with Linstead Market. Their intangible assets also grew. Inventories and receivables went up by a lot as well. Some of the inventories increased due to them trying to store a lot of, for example, the bottles and cans that they had some trouble getting in the previous periods, so that they would always be able to continue meeting demand in the market. The cash balances went down as well. Not as well. Conversely, the cash balances went down, and this is expected given that they're on a growing path. So it's kind of normal for them to be spending a lot of money. Liabilities also increased by over 500%, and that is also in line with the growth and investing. Shareholders' equity went up by 38%. Most of that came from the increase in the profits that they saw, but also some of it was from the consolidation of newly acquired investments. So they're rolling everything into the balance sheet. Looking at the price performance and valuation, currently Spur Tree trades at about 34 times, while the market PE, that's for the junior market manufacturing companies, is approximately 26 times. So this number would make it appear that Spur Tree is somewhat overvalued compared to its peers on the junior market. However, given the speed at which Spur Tree is growing, its higher price to earnings ratio when compared to its peers may be justified. We know that the
Mm.
price has moved from the original IPO price of $1, and it went up as high as $4. So now at $2.64, it does have some value for the discerning investor. The outlook for the market now. Our outlook for Spur Tree remains positive given the huge growth potential. There's also, we believe, untapped segments left within the diaspora and Caribbean market. And given their proactive pursuit of aggressive growth strategies and investments to ensure continuous growth, we believe that it's definitely a company to look out for. However, there are, of course, possible headwinds as well. Given that the supply chain disruptions impacted their production where they were unable to source enough bottles and cans, that's something that could happen again with any external shocks. There's also the local availability of their raw materials. Most of the materials are agricultural products. So if there's adverse weather or climate change, then there's likely that the company will not be able to meet the demand, and thus that would impact profits. Currently, inflationary pressures remain high. They're trending down, but they're still high. And of course, this will likely impact labor and raw material prices as well. Additionally, central banks have continued with a tight monetary policy. We see where the BOJ has decided to hold interest rates, but other countries such as the US have continued to hike. Though the pace has reduced, they're still hiking. So that remains an issue. As a company that looks to grow and make acquisitions, they're going to be facing much higher financing costs with higher interest rates. And this may curtail their expansion activities. This is the main source of their growth that we have seen, acquiring companies in order to grow. So if they're unable to finance those, then their profits may reach a limit. Of
Mm,
course, given the high interest rates as well, putting a pressure on the whole economy, there is the big R, the recession fears. I consider Spur Tree products a premium product because if I talk to my friends and family overseas, they would probably say, a can of Aki is somewhat expensive relatively. So if there's a recession and you have to choose, you're going to probably bypass the premium product to go for maybe a store brand or a different kind of protein. So that's something that they have to look out for if the economy slows down here and in most of the diaspora markets. However, Spur Tree has a wide distribution network right across the US, Canada, Cayman, and the UK. And with the diverse range of products, and we see them having a whole, the line abroad is so much more than we have seen here. From sauces, seasonings, cornmeal, juices. So, given this
yeah.
wide
I remember
array of
when they
products,
did the IPO, I was like, I'd never heard of Spur Tree before, but everybody abroad, Spur Tree is big.
yes, yes, it's full on the Caribbean shelves in those supermarkets over there, and they have everything, even cornmeal. I was shocked to see the cornmeal. So, given this diverse range of products, we still anticipate that growth will remain and the company still looks good. So, in summary, based on what I've said here, we believe that Spur Tree does offer some value to investors and it's definitely a stock to look at.
Thank you so much for that assessment, Faye.
You're
Very
welcome.
well done, and you gave us a lot of food for thought. No pun intended this evening.